Good afternoon. Today is Wednesday, May the 31st. We are into the last trading day of the month of May. And to keep it updated, we have just received news overnight that as far as the U.S. debt negotiation goes, although the White House and the House of Representatives has a tentative agreement, it has met with some opposition. There were reports that at least 25 members of the Republican Party do not want to vote, do not want to agree to vote on this bill. That means to say that if there is a case, there is a risk that this bill may not be able to pass through the House of Representatives, which in turn will delay or maybe stop the bill from progressing to the Senate for voting. And if that's the case, considering that we are already at the cusp of moving into the month of June, that means the pressure is piling up very, very fast as to whether a debt ceiling deal can be achieved before the X date, or so-called June the 5th, when the Secretary of the Treasury, Janet Yellen, has already told us that she believes by then the U.S. Treasury will really run out of money, and that means the U.S. will go into default. Now, before that, I think the rating agency may actually downgrade U.S. sovereign debt rating, and that will be catastrophic as far as we are concerned, because the last time they did that was back in 2011 during the Obama administration, in which that actually happens, and that caused the market to go into a downtrend. Okay, so basically we may see the same thing again this time around if this debt deal do not get passed through Congress. So the risk is actually quite real right now. So like I said yesterday, do not pop the champagne too early, because this bill needs to be passed by Congress before it can be signed into law by the president. So let's watch for new development as it unfolds. Now, overnight we can see the U.S. equity market ended up mixed. Okay, we have the Dow Jones still basically not sure whether to move higher or to stay where it is. So we can see the Dow Jones in the 4 hours time frame is stuck just above the 33,000 levels, closing at 33,054 overnight. No much progress has been made, but we will have to see how things unfold over the next few hours. Okay, over in the S&P, we do see a bit of a rally. S&P went up higher, but it opened on a high note, but did not quite close on a high note. Market went up to a new high for the year at 4,231.1, and then it closed back down. If the market does close below the February low, which was the previous low, the previous high point, then that could set the stage for lower prices in the days ahead, especially as we approach the weekend. Now, short term, if the market does pull back somewhere between 4,163 to 4,168, I think that could be an area of opportunity, although the upside is getting very, very limited. Near-term target is somewhere between 4,240 to 4,340 levels. So if you are still in the mood to buy, that level between 4,160 to 4,180 could be one last level to buy, but I would caution chasing this market ever higher in view of the difficulties that we are reportedly hearing from members of the Republican Party. Okay, so in the Nasdaq itself, we can see the Nasdaq, despite what is happening, continue to charge higher. We are into a new territorial high. In fact, we are already above the last April high, which is at 14,277. We have a new high here this year at 14,520.1. So this is an area, like I mentioned previously, an area of high probability that we will see very persistent selling interest re-emerging here. This level is 14,135 to 14,712. So right now we will have to see if the market can sustain at such levels in view of the news that we hear that this bill may have difficulty passing through the House of Representatives. So over in Asia, we can see that the Nikkei continues to slide back after trying to go higher. In fact, it has gone so high that it is already above the July high of 1990. So lately we can see that ever since news that Warren Buffett has moved into the Japanese equity markets, this market has been on fire, and we can see that the recent rally to 31,560 does appear to lose some steam here, but there is no sign that the market is reversing in any significant way to the downside. So we will still have to maintain a watch over this market here, okay? And I will be buying, that's for sure, okay? And in the Hang Seng market, we can see that the Hang Seng continue to slide lower. Now the market is challenging the 18,000 level with the low trading at 18,139 in the morning itself. And this bracket right now has bring us to a new zone in which I think market ever lower below 18,000, the risk actually has increased disproportionately. Somewhere between 17,780 to 18,255, I think the market may actually find some kind of buying interest. So do watch out for possible reversal happening around these levels, okay? Over in Hong Kong, over in China, we can still see that prices are still trading near the lower end of the range. The market actually traded to a low of 3,789 on Tuesday itself. So we can see that this market is currently near these levels. Incidentally, this level is also where I think the likelihood of buy interest may actually re-emerge. That level is 3,758 to 3,849. Okay, so we will have to see whether we can see any kind of buying interest, okay? But for all intended purposes, this market has actually turned bearish. So do watch out if you are buying, because the buying interest has is no longer been justified except for a technical rebound, okay? So do watch out for this. And in energy market, we can see oil prices slide 4% overnight, with the WTI currently trading below $70 per barrel, with a low at $69.25 overnight. Currently, the market is just hovering around these levels. In fact, yesterday night, there was a breach of $69 to $68.99. Now, taken into consideration, this level is actually quite an ideal level to go long. I have already gone long, so let's see whether my idea of a bounce back to challenge the May high at $76.07 will actually play out. Actually, I think there's a very good odds of that happening, but that is only my view, okay? Over in precious metal market, we can see that the gold market actually rebounded. Incidentally, we also saw the dollar actually pull back. So these two needs to work in tandem. When the dollar pulls back, gold prices and precious metal complex as a whole do have a chance to rebound, and we see just that overnight. Market went up to a low 1,932.14 cents in the gold market, rebounding to as high as $1,963.57 overnight. And if we do get a minor pullback somewhere between 1,944 to 1,948, that could be a good level to position a long position for an immediate challenge of the high here at 1,984. So that will be the immediate target, with a possibility the market actually may go even higher towards the 2006 to 2024 dollars. Okay, so that will be the secondary target. Immediate resistance will have to be overcome beyond 1,984. Over in the silver market, there was hardly any rebound. Market actually rebound 1 day ahead of the gold market rebound. So if in the near term we do see a pullback, ideally between $22.95 to $23, I think that will be another level to watch out for buying interest. Immediately the target will be a challenge of the mid-May high at $24.21. Okay. Dollar, like I mentioned earlier, overnight we see a pullback from 104.42. Overnight, we see the market actually pull back, but this morning we see another rally in the dollar index, possibly to challenge the mid-March high at 104.72. This is actually quite a reasonable prospect, because the way we see that this rally from the May low at 152 does looks to be still very much in play. So if the market do take out 104.72, it will not surprise me. However, I think it will be another story for the market to go up, at least for now, to challenge 105.87. So by and large, it's a higher to sell situation for me, at least for a technical pullback. And the euro dollar euro actually stabilized at 106.72 on Tuesday, and we have a bounce back. But this morning we see another sell-off happening as we are speaking. The low so far, currently the market is at 106.96. Okay, whether the market will go below 106.72 remains to be seen, but basically this entire area of 106.40 to 107.40 is a buying zone for me. So let's see whether the market will be able to stabilize within this bracket of prices for a rebound into 108.85 to 109.35. Okay. Over in sterling, we also see the same thing, but sterling rebound has been a little bit more robust compared to the euro dollar. The market low is 123.09, and we can see that the overnight rebound see a high of 124.47. And right now, although the market is pulling back, but it does not compromise the immediate outlook for a bounce into 124.90 to 125.40. Aussie dollars remains still very offered. Right now, the market is trading below the 65 cents level. In fact, we have a marginal low this morning at 0.6489, and it looks like it may extend lower without any kind of significant rebound. If we see a slide below this level, right now I have to remove this bracket because it's no longer valid, then the market may go down and challenge the last November low at 0.6385. Dollars versus Canadian, we can see that the dollar right now is resurging again, possibly with another a challenge of the 1.3655 high that we saw on last Friday, and this will bring back the prospect of the market going into this bracket of prices, which I originally highlighted, which I think will be somewhere of interest for me. 136.60 to 137.20 levels, that will be a great level to see if the market can be kept up here. Incidentally, that level is also going to be able to challenge the last month high, which is April high at 136.68. Dollar yen do see a bit of a pullback from 140.93 overnight. We can see that the market did not rebound just like what we saw in dollar Canadian. So dollar yen remains still offered. The current level right now is 139.82. So near-term support should be around 138.75 levels. If this market close below this level, there's nothing in between all the way until 133.50. So there's a big drop here. So I do have already turned short on the dollar versus the yen. So let's see whether this will play out. Now over in the Bitcoin itself, Bitcoin remains very much offered. The high traded at 28,452 does appear to be doing a three-wave pullback, which I highlighted yesterday. If the market can somehow pull back to $27,745 to 28,185, that could be actually offer a good buying opportunity here. So let's look out for that possibility. And overall, I do am a little bit bullish on the outlook of Bitcoin here. So that let's see whether it can actually hold at between 27,700 to 28,200. Right, this is all I have for you for today. In the meantime, you take care, and I'll see you tomorrow. Bye-bye. Take care.